Ladies and gentlemen, good day and welcome to Steel Strips Wheels Limited Q4 FY24 earnings conference call hosted by SMIPS Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. And a disclaimer to this effect has been included in the financial results and investor presentation, which has been shared with you earlier and available on the stock exchange website. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Mr. Amit Hiranandani from SMIPS Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of SMIPS Limited, I welcome you all to Q4 FY24 conference call of Steel Strips Wheels Limited. We are pleased to host the senior management of the company. Today we have with us Mr. Dheeraj Garg, MD of the company, Mr. Mohan Joshi, Executive Director, Mr. Naveen Sorak, CFO, and Mr. Pranav Jain, DGM Finance. We will start the call with initial commentary from the management, and then we will open the floor for Q&A. Now, I hand over the call to the management team. Over to you, sir.
Good afternoon, everyone. I hope everyone is doing really well. I want to start off by sharing some of the highlights of the past financial year's performance. So, in terms of turnover, we had our highest value in terms of revenue. So, we had 4,357 crores. We had our highest EBITDA for the year at 481 crores, highest net profit at 220 crores, and highest sales volume at 19 million, or highest commercial vehicle volume at close to 26.67 lakhs. Highest alloy wheel volume at close to 3 million. And so the other non-revenue highlights are that we've shifted to a new tax regime where the effective tax rate has come down to 25.17%. Hitherto it was 34.94%. We've also completed the acquisition of EMW Auto Components, and the plant is fully in our custody and upkeep. We have also done some ESG projects in terms of solar and hybrid, and we spent up to 10 crore rupees, and we've generated, in fact, we've generated 9.5 crores in savings from this project. Going forward, I would like to sort of, have a very open discussion with you on the growth prospects for this year. As we all know that this is an election year, and so we have seen a slight slowdown in the CV industry so far, and this is going to be followed by a monsoon. So last year we did the highest CV volume. This year, our forecast is ranging from a flat year to somewhat tepid growth. So not much growth in the CV segment we expect in the domestic side. On the aluminium wheel side, we expect about a 10% growth. This is based on our past performance, past projects that we have been nominated for. So those projects will come into play, and we expect to have a 10% growth on the aluminium wheel, domestic wheel business. This all I'm talking about is domestic. Then the two-wheeler industry, we have targeted the electrical vehicle industry, and there we are leaders now for wheels, and they are in much better value addition on these wheels, and this business should grow about by 16%. The last year, people had pointed out that our passenger car steel wheel business had declined, and we had mentioned that we had given up some projects of Maruti because they were not giving us enough margins. So, but this year, I'm glad to tell you that we are projecting a 10.6% growth in the steel wheel for passenger cars. So, and finally, and the most important thing is our tractor business, because we have signed up certain LTAs with some prominent customers. That is going to lead to a 12% growth. I'm assuming that the industry doesn't grow much, or rather stays flat, but within the industry pie, our share of business is going to increase. So here I can say with prominence that our tractor share of business is going to go up this year. And this means about 12% growth in revenue in terms of volume, and obviously value also will follow suit. We have seen, so I'm talking mostly now in terms of numbers, because numbers are really what matters, because raw material prices influence the selling price downward and upward. So I'm keeping my focus only on numbers. On numbers, we are looking at 2 million wheels this year, 20 million wheels this year versus 19 million last year. And so that, and also let me mention here one more thing, that the export business that revived last year, we expect this to grow by another 10% this year. And in the export business, we are adding new product lines like off-road vehicle wheels. We found traction in Europe and in America, and slowly but surely we are increasing our sales in the export front in the OTS segment. Plus, our alloy wheel exports are doing considerably well. I cannot reveal a lot of things in this press conference and this call, but suffice to say that we will do. This will be a growth area for us going forward in the future. This concerns, this dialogue, this monologue of mine concerns only the existing business. But if you recall, we have added another business line last year, and that is going to pay off its revenues this year starting in September, which is aluminum knuckles. We are the first company in India to do that. It's an import substitute, and we already have signed up with two. Last time I spoke to you, we had signed up with just one OEM, but now I can tell you that we have signed up with two OEMs, and this is mainly going into the SUV segment cars, where the pricing power is much stronger with a OEM, and they definitely want to add more features like better maneuverability of the car by introducing aluminum knuckles. So this, in a nutshell, explains our past and current year's focus. So I'm very happy to answer questions as they may come about. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sridhar Kalani from Axis Securities Limited. Please go ahead. Sridhar, your line has been unmuted. Please go ahead with your question.
Yeah, sorry. Thank you for the opportunity. Good morning. So my first question is with respect to the export side, where we believe that in the current situation we are facing some issues because of the Red Sea. If you could throw some light on the same.
Okay. So last time when I had spoken to you all, I had mentioned about the Red Sea crisis affecting our shipments in January, February, and March also. So more or less, that issue per se hasn't been resolved, but customers have gotten used to it, and so that's why we feel that that issue will not come in the way so much this year, and we're projecting a 10% increase in exports. So I mean, in a way, we are a little bit better off because freight from our competitors in Asia, like Thailand or Vietnam, has increased much more than the freight from India. So we now have some advantage. Earlier, the customers were wary of paying higher freights. Now the customers have now accustomed themselves to higher freight rates now, for the moment, at least till the crisis in the Red Sea goes on. So net, if I were to tell you very clearly that this year there is nothing apparent as a crisis on account of Red Sea. Customers have adjusted their inventories. So there will be other dynamics rather than the Red Sea issue that will come into play.
Okay, and so just required some clarification with respect to the nomination order of 8 million euros that we have received. So we will be competing with how many competitors, and will there be any competitor from China also?
No, I don't think there is I don't know if they consider China in this case or not, but this business was decided based on competition from our European compatriots. So all the players in Europe would have competed for this business.
Okay. Thank you. And last question is on the CV industry, like you have mentioned a flat and tepid CV growth outlook for the current year. If you could just help us understand what the OEMs, any guidance have they given to you with respect to the same? Because I think one of them
very easily, nobody knows. Not even the OEM knows. Not even the buyers. Nobody in the industry knows what will happen to the CV industry. But what we can be sure, as I mentioned to you, that we have acquired a bigger market share in tractor industry. We have acquired a bigger market share in car steel wheel industry, a bigger market share in car alloy wheel industry. And we are assuming that the industry will remain flat. Even though the industry will remain zero, we will grow in tractor, we will grow in export, we will grow in passenger car steel wheels. And yeah, that's it.
Okay. 190 million.
While I'm making these, but we'll go in the two-wheel industry. We are assuming a 16% increase in two-wheeler industry, but also we increase market share in this. We are the leaders in the two-wheeler wheels.
Okay. Thank you so much. Thank you.
Thank you. The next question is from the line of Suresh Jain from NB Investments. Please go ahead.
Sir, thanks for the opportunity. I had few questions. The first one is, what is the timeline for the ramping up of the following facilities? One is the AMW, which we have acquired, then the whatever the aluminum alloy capacities we have increased, plus the new product that you mentioned, aluminum knuckles. So when do you expect these three things to run up at full capacity? How much time?
Yes, I understand. So thank you for this question. I think it's an important question. As you know, we have raised our capacity to close to 5 million wheels in alloy, and we are banking on a big growth in exports and also a big growth in the domestic market, because the take rate is always increasing for aluminum wheels, barring a setback that we had last year when some of the steel wheels got back into aluminum wheels. But we have more market share as we see the new models getting launched. A lot of these wheels, except for Maruti, have our wheels, Maruti and Toyota I'm talking about. So we are quite, that's why we are projecting a 10% growth in alloy wheels, domestic. So not only exports going to be separate, but domestic itself will grow 10% for us. For example, the 5-door Thar is with us, and we're having a lot of hopes on that vehicle launch. So I think in terms of filling up 5 million capacity, although we are projecting only 3 million wheels, or 10% higher than last year, against 3.3 million wheels, we feel that this is a conservative number, and if nothing bad happens because of the elections, we can definitely do better. But nailing the final question of when will I sell 5 million wheels, I think next year is going to be very interesting. Next year should see us cross 4 million wheels. And this I'm saying not just from the domestic market growth or new businesses that will come to us. It's also because of the other activities that we've done outside India that are going to play a role in it.
So the way you have explained now, in all possibilities, the current capacity should take care of aluminum alloy wheels demand till FY27. Is that
more or less? You are absolutely right. But you never know with how things are. Now I know. Let me add to this. You must have read that we have been nominated by top OEM, and that was Maruti. So everybody now knows that we have made a breakthrough in Maruti. Now I cannot say more, but there is a possibility that we build a new factory close to Maruti in Haryana. So that would be based on our relationship as it goes, follows the first nomination to another nomination, and then we hope to have a small but important market share in Maruti going forward. And that would mean that along with our exports and growing existing customers, Maruti will call for a need to build another capacity expansion. So 26-27, yes, but we would definitely need to come closer to Maruti. So I'm just giving you a heads up and all the investor community that we may be coming up with a new factory in Punjab, very close to Maruti.
So with Maruti, whatever the pricing issue was there, that was only for the steel wheels, whereas we have got the business for aluminum alloy wheels.
Right,
That is correct?
Right. So there also I forgot to add here something that we have. So I don't want to digress first. Let me answer all your three questions, but I have one more statement to make after that. So this is regarding Maruti alloy wheel. Yes, right now the business we got is a business that we get into a new changeover in a couple of years, or less than about a couple of years from now, and we still have to develop the wheel. But what we are in discussion with is to get more businesses that are going to be a carryover of the existing wheel that we have nomination for. So that business, if it comes, will be sizable in volume and attractive price, attractive enough to justify the current performance of the company. So all I can say is that. So I hope I have answered your question about 26, 27.
Yeah, you have covered the aluminum alloy wheels, but what about the other two, sir? Steel wheels and knuckles?
Yeah. So steel wheels, mainly your question was regarding AMW. Now what we have seen is that AMW is basically a big giant sitting out there with a lot of possibilities, but we don't see those possibilities coming into fruition immediately. What we foresee there is that we would use that facility to make OTR wheels, for which we are already seeding the market in Europe and America, and we are getting good traction. So maybe next financial year we will start working on a new line of new businesses that concern specific very heavy wheels, very big wheels, and that when that business then comes closer to our consideration, we will share it with the public, with the investor community, and that you can ring me up on this issue, maybe perhaps around the third quarter, or the second or third quarter conference call, and you would please ask me about this. So I'll be happy to answer. With regards to Knuckles, I think Knuckles has been a very exciting journey for us. We should start our revenue growth from September onwards. Revenue coming in from Knuckles, perhaps a little bit earlier. And this year we should be doing close to about, if I'm not mistaken, about 35 crores in revenue. And then going forward, we expect this revenue to go more than double. And then after that, this revenue to go more than 4 times. So I think I don't want to share a lot of information on this aspect just yet, because we are the first mover and we want to keep that advantage secret. So, but all I can say is that the company is very excited and very happy for making that decision to invest in Knuckles. And finally, that you have raised a very pertinent point that the pricing of steel wheels was very, very tough, especially if you look at our competitors' balance sheet and our balance sheet on past cast steel wheels. So I can inform you, and I have been talking about this in the last 1 year or so, or even less than that, we are on the verge of a breakthrough with an important OEM who's one of the biggest, and in fact, a couple of OEMs rather, to get a price correction that had mired us in low margins for the last 2 decades almost. So that good news I can share with the community again while I'm speaking to you.
Sir, this AMW has, if I'm right, I think 50 or 70 lakh capacity. So now you are saying that you want to add a new line in FY26 for a bigger size one.
We want to use that equipment. That is already there. We want to use. Yeah,
I agree, sir. No, what I was trying to ask is, whatever the current capacity we have, so how much time to utilize that? That is what the question is.
No, so the point is, it may never be fully utilized forever.
Okay.
So, okay, but what we are doing is we are adding capacity in Jamshedpur, for example. We are adding a new CV capacity of almost 400,000 wheels. That is coming from equipment that was lying in AMW. You see, we are not letting the equipment idle. We are just moving that equipment to other parts of our locations where they're already producing in mass. So we don't want to create a new cost center just because there's equipment lying there. We want to utilize it more efficiently.
Okay, fair enough, sir. That is very helpful. So my second question is regarding, as and when we see, aluminum alloy wheels is one of the fast-growing segments, and you are also exploring export markets also. So I know you said another 2 years is after that only you will be thinking of expanding the capacity. Just wanted a clarity on, assuming that you want to double the capacity at Mehsana, how much can be the capex there, and how much time it will take
I didn't say we want to double the capacity. I said we will want
I'm just saying, as and when you want to increase the capacity, let's say from the current 5 million.
It's already increased to 5 million deals. That's what I said.
I know. So if, let's say, post that, how much time it would take, since it's a brownfield, how much time would it take to increase the capacity?
It's already increased, my friend.
No, sir, I know. From 5 million, I'm saying 2 years down the line.
No. We will not, as I told you, we will build a new capacity in Punjab.
Oh, okay. That is clear. Yes. So my next question is regarding the debt part. See, we are at 1,000 odd crores now. So now we were under the impression that there would not be much capex in the next 2 years or so, but now you are saying maybe for Maruti you would like to put up a plant somewhere in Punjab near to their factory. So the question is, again, with increase in sales, you will have increase in working capital requirement also, plus this capex also. So what is the management, outlook? What would they like, will this debt come down in the next 2 to 3 years, or will it remain in the current level only?
I think on the debt side, I think Mr. Naveen could answer this question better so that he gives full clarity to the entire community. Just hold on, I think.
Yeah.
Yes, see, on the overall debt side, if you look at the debt that we have as on March 24 is 1,048 CR, which is long-term and short-term. Long-term of almost 487 CR and short-term of 561 CR. And this is a jump of almost 400 crore, which is predominantly to fund the capex which is there on the table. With the existing business is almost 380 crore, which we had already shared with the market, which will be incurring this year, covering multiple facets, was the alloy wheel extension, the knuckles, then the renewable energy that we are working with, and then the couple of flow forming equipment that we did besides the general capex that we do. So and along with that, we also acquired AMW, wherein the outgo was almost 140 crore, which raised the total capex for the last year to almost 520 crore, which was funded by a mix of accruals as well as debt. So accrual which was generated last year is almost 220 crores.
Correct.
So 220 crores to fund that 520, and the balance was in the form of term loans. So what we have done is we have funded all our long-term requirements via long-term funds with nil prepayment conditions, so that if the conditions allow subsequently in terms of liquidity, we will intend to prepay. So as we guided last time, that the debt that you are seeing as on March 24 is the peak debt in our books, and subsequently it should taper down. So if you look at the repayments which are scheduled for next 3 years are almost 105 odd crore annually. Along with that, there is a decent accrual which will keep on accruing in our books. So like 220 crores last year, this number will also improve with the improvement in the volumes as indicated. And in terms of overall capex, which was there on the table at least for next year, was in the range of 225 odd crore, which can be funded entirely from the accruals, and nothing needs to be borrowed from the outside market. So on an overall basis, whatever capex is there on the table as of now will be funded from accruals. Besides that, there will be 105 crore of repayment which we will do, which will cut down on the debt side.
That's what was my question. Now you said very clearly the capex plan for FY.
Suresh, I request you to come back for a follow-up question. Thank you.
Okay.
The next question is from the line of Omkar Arora from Eraya Capital. Please go ahead.
Hi, sir. Congratulations on a good set of results. So thank you for providing us the in-depth information about what kind of numbers we are planning to do next year. Can you also provide us some guidance on the overall sales that you expect on the company level and the EBITDA growth that you're expecting over the next year? Also, when it comes to EBITDA growth, are you expecting the margins to stay stagnant or go down since the alloy business is not growing expected to grow at the same pace as the CE business? So is there any pressure on margins that might come, or do you expect them to go up or stay stagnant?
Okay, that's a good question. So let me roll back to what I had said earlier. So last year we had projected that we would improve our margins per wheel. So we are talking only per wheel. So percentage-wise, kindly do not bring into discussion because it gets distorted from the change in raw material prices, which affects the selling price, because our raw material prices are a pass-through. So, but in terms of last year, what happened was that we had to we got some competition from Vietnam and from Thailand temporarily, and which got sort of nulled, and then again it came back. So we had to drop our prices close to 5 to 6% in terms of our export prices. So that sort of kicker did sort of dampen our export margins. And also then we also had some issues in the first quarter where we had to pay extra freights for the deals that we had already contracted with the customers, the OEM customers, for example. So that was a dampener to our business. But if now there are two things for this financial year. Again, kindly have a note on that. One is that our growth this year is coming mainly from value-added products. Again, let me remind everybody listening to this. Please remember this. Tractor business is going to grow by 10 to 12%. Aluminium wheel business is going to grow by 10 to 12%. And so these two businesses, and export is going to grow by 10%. So these three businesses on their own will add to the absolute per wheel margin. So the 258 margin that you see in the PPT will get enhanced. I don't want to put a figure and then start, discussing why that has come or why have we exceeded or not done as well as you projected. But given the fact that all these three businesses are better in terms of margins compared to a steel wheels business, which is the main business in terms of volume, we expect that these three things will pull up the margins to a little higher extent. Secondly, and most importantly, as I mentioned earlier 10 minutes ago, that we have been able to come close to understanding with a couple of OEMs to correct the prices that were depressed for the last 2 decades. So that's a historic thing. I had mentioned this in the last conference call also with other people also. That has actually happened now. So once I get a final confirmation, we are very close to clinching the whole discussion. Once that happens, you will see the impact of that itself in the first quarter. So because that will be backdated from 1st of April. So I don't want to comment on that, but yes, to your question, margins per wheel will increase, should increase, because again, let me summarize. The three businesses that are growing this year are alloy wheels, exports, and tractor. All these three businesses have a better EBITDA per wheel compared to the other wheels. Secondly, the price correction in the bread and butter business for past car steel wheels is seeing a turnaround, and this has come about because we've acquired AMW. People realize that there is no competition and that the prices were really depressed, and they have agreed to substantially correct our prices, and that will lead to better margins per wheel. And you will see that in the first quarter. So please, in the conference call next quarter, you please ask me this question.
Sure, sir. So what is your EBITDA per wheel as of right now? What kind of numbers do you see on that front by next year?
Again, as I said, I don't want to comment on the numbers because last year we did comment on the numbers. We were hopeful to get better numbers, but we managed to get similar numbers like the previous year. But the point is that this year I have real things in my hand. I don't think that there's going to be another Red Sea crisis that will cause me to lose money on the freight. There won't be competition per se. More or less, we know who our competition is from Asia. And so we think that those issues will not come as they came last year. Plus, the most important thing is that we have a price correction on our main bread and butter business. 80% or 70% of our business will see some kind of, or a large part of the 70-80% business will see price correction on the positive side. Okay, so 258 was the number last year, so you definitely you will see a much better number than 258.
So we've seen in the news that Uno Minda is also...
253 was the number last year. I think I've been just correct, 253 was the number last year, yes.
Okay, sure. So we have recently heard in the news that Uno Minda is also planning to add capacity on the alloy wheel front over the next 3 years, which is I think around 5 million wheels or something. So what is it about us that will differentiate us from them in terms of, can you just throw some light on the modes that we have and how we are planning to improve?
I cannot comment on what they are doing. They must have their own strategy. All I can comment is that I have an order book in front of me that is extending up till 2027. I see the numbers. I see the possibility of expanding my market beyond India, and that's what I'm focused on.
Sure. Thank you so much.
Thank you. The next question is from the line of Aegis Lakhani from Unifi Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Could you just call out that from the 3.7 million units that you have exported, how much was steel and how much was alloy this year?
I think that's a good question. I don't know if we have released this number to anybody, but I can just say that the rate of growth is pretty good for both the businesses, and I would like to keep it at that. But it's a brilliant question you asked. I'm not denying this, and it's a very insightful question, but I don't want to reveal my cards to my competition.
Fair point. So the other thing I wanted to learn was, I think you alluded to this earlier, that in pricing, you had competition because of which your pricing was lower by 5%. But what is very unclear to me is that if you take the revenue of the revenues from export, which you have done this year, which is 630 crores, and divide that by the volume, the realization per unit is much significantly lower than what you had done last year on a lower base. And that's a little perplexing because, your alloy wheel contribution would have maybe been there as a part of revenues this year, which was probably lower the year prior. So I don't understand the realization reduction.
So there are two things to it. So there is a raw material price correction, which was substantial. In 22-23, the raw material prices went up tremendously. So those get corrected in the following year. And on top of that steel price correction, we discounted our goods by 5 to 6%, as I mentioned. So I will still have to look at the I don't know. Give me half a second. Let me check the numbers for last year. 1 second, please.
Yeah.
Total volume कितना था? Okay, so I hear your question very well. Now I get it. So if you look at the product mix for 22-23 and 23-24, there has been a big jump in the sale of car wheels. And car wheels obviously are not priced at the same level as truck wheels. So our truck wheel sales have been flat in 23-24 versus 22-23, but the car wheel sales have jumped higher. So you're right to point out that the price from an average price realization of 1,900 rupees has come down to 1,700 rupees, but it is 90% made because 80% because of the change in product mix. And you would have seen that our exports have doubled or more than doubled in this period that we're discussing.
Got it. So, sir, at an EBITDA level, there would have been improvement, but we don't know of that number today, correct?
So, percentage-wise, again, I don't want to go into percentages.
So, as I said, per unit basis, sir.
Per unit basis. Per unit wheel, obviously, is more than the average that we get generally, or even on car wheels. So, it's a pretty good scenario for us.
Got it. Sir, the other thing is that could you just comment a little bit about the knuckle casting? See, is there, I know you've called out a number of 35 crores, but is the realizations and EBITDA in that business significantly higher than alloy wheels? To what extent can you call that out today?
So, as I said, it's a very exciting time for us. I will not want to comment on EBITDA numbers. All I can say is that we are on a good wicket. And we are driving well. And it's a new age business. So smart people will understand what I mean by these three things. It's a new age business.
Got it, sir.
Yeah.
So could you just tell me a little bit about, because you mentioned that this is an import substitution sort of product, how long did it take? Where did you acquire this technology from?
Again, I don't want to comment on this. I don't want to comment. But it has been a joint collaboration with the OEM. The OEM has supported us, and we've done the work. And, we have a very tight relationship with Mahindra, for example. And there's a lot of trust, a lot of transparency, and a lot of value that we bring to each other. So that has resulted in this happening. And after Mahindra, then obviously we've got other customers. And we should leave it at that. And I think over next couple of years, when the sales really go up, the market will get mature and people will understand where we're coming from. And I think that is something that you all need to keep a good close eye on.
Noted, sir. So is there a possibility that an OEM can work with another auto ank manufacturer to come up with anything on knuckle casting in the next 1.5 year, because there's a development time associated as well. So is that kind of a possibility? Does that exist? Or
yeah, that's what we are raising proof of. That's why we started talking about this last year, and this year we will start delivering mass production components to them. This is how collaboration is done. Yeah.
Yeah, my question, sir, is that is it possible that another OEM could be in discussion with another auto ank person,
let's see what happens. I don't know. I really don't know. This is predominantly an SUV thing, and Mahindra is number one SUV. And once they've tied up with us, they will not go to another vendor to develop the same thing, because this requires a lot of hard work and IP that we both develop jointly. So it's not so easy.
I got it, sir. Got it. So is there any exclusivity that binds you only to them, or
no? There's none. There's none.
Okay. Got it, sir. Sir, could you just also provide an outlook of how the steel side of the business, steel side will do in FY24 at a console level, because you have too many segments and it's very difficult
for us. Consolidated level on steel, I don't have the weighted average number with me. Let me repeat myself. 10% growth in the bread and butter business, which is steel wheels for pass cars. So that's about 70-80% of my volume. Yeah. So if I'm saying that that's going to grow by 10%, that should give you a flavor as to how sturdy or steady the business will be.
Got it. Thank you and all the best.
Thank you, sir.
Thank you. The next question is from the line of Smith from Nivesha Investment and Advisories. Please go ahead.
Yeah, hi. Thanks for the opportunity. Can you please report the breakup of other income?
Come again?
Hello?
Can you repeat again, please?
Can you please provide the breakup of other income?
Other income is a mix of one, profit and sale of asset, then the interest income and FDR, and I guess these two are the predominant item there.
Okay, sir. Okay, thank you. That's it.
Thank you. The next question is from the line of Chirag Shah from White Pine Investment Management Private Limited. Please go ahead.
Yeah, thanks for the opportunity. I have a few questions actually. One, when I look at the steel wheel volumes since F19, they've actually declined for us in domestic market. So can you just give a broad color? Is it that the tonnage per wheel has gone up and hence number of units have gone down, or is it the industry dynamics is driving this, or have we lost some market share? How to look at that?
So I'm not able to fully understand what you're asking, but I think my CFO does understand. He will answer this question.
So, Chirag, what exactly you are comparing? You are comparing the PV volumes?
Yeah, so if I look at the breakup that you share, your steel wheel volumes in F19 were 14.1 million, domestic volumes.
Mm-hmm.
Okay, and today it is 12.5 million. So there is a drop over in volume.
But then there, Chirag, you also need to consider the transition which has happened from steel to alloy. So if you are comparing, let's say, the domestic business for us, you need to also include the alloy wheel number. So the year that you quoted, that was 18-19, wherein the number was almost 141 lakhs in terms of steel wheel volumes. There the alloy was almost 1.94 lakhs. If you look at FY24 for us, the steel, as you rightly quoted, was 125.55 lakhs. But along with that, there was an alloy wheel domestic sale of around 28 lakhs. So you need to look at it in total while you comparing these volumes as far as domestic market is concerned.
Fair point. This is helpful. The second question is, if I look at the alloy wheel, especially the export aspiration, okay, there seems to be some dampening happening because we were hopeful of taking it to 500,000 in March 25, and our aspiration was to be 3 million exports by March 30. It seems that is there a delay of projects from the OEM who are supposed to offtake, or if you can just comment on that, how should we look at that?
So, Chirag, as far as the aspirations are concerned, we will keep the aspirations high, but then again, our numbers are directly reflection of how the industry has panned out. So, if you look at, so even for current year, as we have quoted, that we are targeting 20 million in terms of overall volume, we are targeting roughly 4 million in export. So these are the aspirations that we are trying to tap, considering how the market situations are. But then see, these situations are very dynamic. You never know how the export market pan out going forward. So let's say things pan out in our favor, the numbers can go even higher than what we are projecting. So it's a dynamic world. The numbers will keep on changing. The numbers that we have quoted today are based on the reflection that we have today of the market.
No, okay. So what I was trying to understand, is there a delay because if your end customer delays, okay, you can't help it, right? You have to push it back by a year or whatever period the offtake gets delayed from your end customer, especially when you are making an entry into a new model. So is that the primary reason? Is that the way to look at it?
No. So, Chirag, if you look at, so as far as we are concerned, none of our projects got delayed. So
okay.
Bang on timeline that we were following. So we were at, let's say, for our wheel expansion, we were toward 3.6 million by March 24. We are already there. And by Q2 of this year, we'll be at 4.8. And this is what exactly that we have planned for. Similarly, for knuckles, we are at the capacity that we have started for. So none of our projects have got delayed because of any customer delay. Is that the growth projections for let's say a year down the line or 2 years down the line is entirely dependent on how the market pans out. So
I was more referring to offtake and not your capacity. So lastly,
so let's say if you look at alloy wheel expansion that we did, so once you do and conclude the expansion, you need to showcase those capacities available at your end to the customer before the customers are willing to float the RFQs. So you need to be up and ready with the capacities in hand, and for the spare capacities in hand, just to get the customer confidence on your side that there are capacities with you which are spare capacities, and you will be able to cater to whatever the demand and subsequent requirements will come up from customer side.
So lastly, any comment if you have on the flow forming?
I request you to come back for a follow-up question. Thank you. The next question is from the line of Rohit from Samvatva Investments. Please go ahead.
Good afternoon, and thank you for the opportunity. So my first question is on, you highlighted last financial year we faced some competition from Vietnam and Thailand. So could you just highlight what's their capacity right now and how big a threat they are to us, especially for the European and the US market?
Yeah, capacities are immense because they're owned by Chinese owners, and they're part of big groups. But I think there is constantly some kind of investigation going on against those companies supplied to America, and also to Europe. So going forward, we feel that that threat will really not suffice because the European Union is moving against anti-circumvention. That is, Chinese companies set up factories outside China, and they supply them cheap raw material that they were already getting in their previous avatar. So that investigation will continue to happen, and we don't see a big threat from them. And they're also very careful in terms of quoting prices to compete abroad. And lastly, their freight costs are sometimes non-competitive because freight from Vietnam and Thailand right now are double the freight from India to Europe or compared to Thailand to Europe. So we have a big trade advantage, and they should persist. So you're right. It's something we need to be focused, vigilant all the time. And I'm glad that you've asked this question. And I would ask you to keep asking me this question every meeting because this is an important question. But beyond that, I cannot say at the moment anything that we will continue to grow our market. We have grown our market. We are number one in America for this caravan steel wheel business, and we continue to lock in that leadership for this year also.
Very much. So just a clarification. So these competitors in Vietnam and Thailand, so are they more towards the CV side or are they towards the passenger vehicle side?
No, they're in both CV as well as PV.
Got it. Okay. So my second question is, around
your voice is cracking up, I think, from the mobile phone.
Sorry to interrupt. I request you to use the handset, please.
Yeah. Is it better now?
Yeah.
Yes,
Yeah.
sir.
So we have done around 19 million wheels. So I just wanted the segment-wise split for passenger vehicles, CVs, if you could give me.
Yeah. Again, the passenger segment-wise breakup of 19 million wheels. I wouldn't want to. That SGA can share with you because I don't have the numbers, but I'm sure the investment arm will do that. Yeah.
Okay. So just one last question. I had just clarification. There's an exceptional item this quarter. So what is that?
Sir, I request you to come back for a follow-up
Just
question.
one last question. I just have this last question. Just on the exceptional item, if you could just give me some clarification, what is this for?
So on the exceptional item that you are looking at in the consolidated sheet is predominantly the write back of the liabilities which are there in the books of AMW. So what is happening? So there were some operational creditors and other liabilities which are there in the books. Now our liabilities to pay will be governed by the resolution plan which got approved by the NCLT. So if there is a difference between the liabilities which are there in the books versus what is being approved, the differential is getting right back. So that's the exceptional wheel that we are looking at in consolidated sheet.
Okay. Thank you so much, sir. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thanks for the opportunity. Sir, is it possible for you to share the realization of alloy and steel wheels?
You mean selling price per wheel?
Yes, right.
From SGA would have all that information. It can be served to whoever asks them.
All right, I'll take it from there.
Yeah.
Thank you. The next question is from the line of Sandeep Dixit from RJV Advisors Private Limited. Please go ahead.
Hi, thanks. Just a couple of questions. Number one is, you had indicated a revenue guidance of over 5,000 crores in FY25. Are we still sticking with that guidance or changing it?
So, more or less, we are saying that we will grow by 10% this year on the top line. So that would, come out to a number of 4,800 crores, around that number. So yeah, I think if there is no election uncertainty and raw material prices being quite okay and interest rates coming down, one can expect that the domestic industry will also do well. So if I'm assuming a 0% growth in CV industry. Now, if the CV industry does well, if it goes by 5%, that in itself can add a good substantial revenue or chunk to us. And similarly, if we are assuming a 0% growth in car industry, then again, if there is a growth there, we can flirt with the 5,000 crore number.
Okay, just a follow-up. We had indicated that AMW will start contributing about 20 crore per month revenue. So is this 4,800 crores excluding that or including the AMW?
I mean, there is no revenue being estimated from AMW right now because we are, as I said, we are increasing our revenue by increasing capacity in Jamshedpur. We have a new brownfield expansion in Jamshedpur that should get over by June, and that will give us a capacity of close to 500,000 wheels. So 500,000 wheels itself is with 4,000 rupees is about 20 crores per month, which is about 250 crores a year. So that's the kind of revenue that rather than doing it in Jamshedpur in Bhuj, we are doing it in Jamshedpur. This brings more economies of scale, and we don't have to open up a big account on a big asset and run it very sporadically or at a lower rate. So this answers your first question about 360 crores revenue coming from AMW. It is actually coming from Jamshedpur because we've taken that equipment line to Jamshedpur.
Right. So, you had indicated that will be about 20 crores per month. Is it operational or yet to be operational?
Well, as I said, June it will get operationalized. That additional capacity will get operationalized in June.
Okay. My second question is on your per wheel EBITDA margin. Last year you said that about 256 rupees per wheel. What was it in 4Q?
I think around about the same 250 plus minus we have been operating at. So 255 has become 253. That's what I'm trying to say.
That was for the full year or full quarter?
Oh, for the full year, right?
Okay. Thank you.
255 is fourth quarter, sorry. 255 is fourth quarter, 253 was the full year.
Full. Okay. Thank you. That's fine.
Thank you. The next follow-up question is from the line of Suresh Jain from NB Investments. Please go ahead.
Thank you for the opportunity once again. Before getting back on the debt issue, I had two smaller questions. So one is, are we the cheapest cost manufacturer of aluminum alloy wheels? And with the introduction of this flow form technology for this product, is there any improvement we could achieve?
Yeah, so you're right to say that India has the lowest cost of manufacturing base in the whole world. So we are no exception to that. And with regards to the flow form wheel, that wheel technology makes the wheel lighter. As a result, you get a weight saving on the car, which is very important for electric cars now. And so it's an add-on feature that, is part of ESG, is part of electrical vehicle manufacturing. So you can call it in many ways, that you use less raw materials, less natural resources, and that helps the planet, as well as it also adds flourish to the EV car, because you get better mileage from the battery. So
thanks for that info, sir. So secondly, I had read that we had planned to enter into casting of the steel for the automotive industry. Is that still on, or we have as of now hold it back?
Again, I didn't get that quite right. The new what?
Casting for the steel.
For the
steel, are we getting into steel casting?
No. We never said that.
It was never in the plan.
I remember saying that we're getting into steel casting at all.
Okay, fair enough. So the last one is about the debt part. To the CFO, sir, I thanks for all that info which you had given. So what my worry was, the debt what we have on the books as on March 24, 1048. So we are generating enough cash flow, but again there is a lot of capex have been planned, and there is also annual payment which you have mentioned. So the increase in sales again will require more working capital. So my question was, going ahead, this debt level of 1,050 crores or whatever is there, it will remain at the same level, or it may go further up. Is the understanding is correct or not?
So there are two parts to it. So if you look at the overall debt levels, I guess you indicated last time as well that the debt that you are seeing as on March 24 will be the peak debt that will be there in our books. And going forward, there will be two things that will happen. One, the natural repayment which are there on the table, which is almost 105 odd crores for next 3 years, so which in any case will definitely happen. Second, as and when we get opportunities based on liquidity that we have in hand to prepay, we'll prepay. So for next year, if you look at, let's say if you repeat the performance that we did in FY24, you will have an accrual post-interest, post-tax, post-dividend and post-repayment of almost 200 odd crores. It will be good enough to serve whatever capex that we plan to do for next year. We are planning somewhere around 225 odd CR, so that can be mitigated fully by accrual. And there will be a reduction of almost 100 crore in the fund. Next year, if there is nothing substantial which is on the table in terms of capex, the entire accruals can be used to prepay the liabilities. So as far as that is concerned, we believe that the debt which is there on March 24 will be the peak.
Okay. Thank you very much for that info, sir, and all the best to the management.
Thank you. The next question is from the line of Pulkit Singhal from Dalmus Capital Management. Please go ahead.
Thank you for the opportunity. My first question is on the domestic alloy wheel growth. We've had a growth of just 10% in FY24, and you're guiding to another 10% in FY25. And the SUV growth has been quite substantial last year and the year before. I'm just trying to understand, is it that we are losing market share and that is why the growth is coming down in domestic alloy wheels within your customers, or is it just a function of you not being present in Maruti and Toyota?
You correctly pointed out that it is a function of there are a couple of big OEMs wherein we are not there in terms of serving. Otherwise, in terms of where our existing businesses that we are serving, the market share is intact. In fact, it is growing. Now, with our entry with the biggest OEM which is there, I guess this business should further improve.
So, Pulkit, your point is well taken, because the larger amount of the growth has come in from Maruti, because Maruti has taken up a larger share of SUV and has grown from that segment itself. They are struggling on the smallest and mid-segment cars, and they've taken up the due course of growth and a little bit of market share back from the market, because now there's been SUV. And I feel there is also a concern which I think we have shared for the industry in many calls, wherein there are three types of wheels, which is steel wheel, which is another one is high vent hole wheel, and third one is the alloy wheel. So there are OEMs, all of them, who are trying to understand the cost impact where the sales are not happening. So to optimize the feature, little bit of alloy wheel concentration has moved from alloy to high vent hole, where the cost of per wheel reduces from 4,500 rupees to maybe 1,500 rupees. This is much cost optimization that a lot of OEMs are trying to optimize. And I think the industry has resulted an industry-wide penetration of 36-37%. And it started from maybe 30% last year, and we've grown a little bit this percentage. Last 7-8 months, this 37% is stagnant at 37%. And we are visualizing that how this 37 will move towards 38-39%. We have had interactions with many OEMs where they are all predicting that this 37% will not immediately go to 50%, but they see this 50% happening over the next 3 to 4 years.
Understood. And when is Maruti expected to take volumes? Is it this year, next year?
The design concept is already underway right now. The Japan testing is already underway, will be underway over the next 4 to 5 months. The feature which we are expecting right now is that the refresh of each model will now, come to us. Right now we got only one model, but over next 1 year, close to 7 refreshes are coming, and all of them are going to be coming to all the 3 vendors now. And I feel it's a journey which has started. I'm not, thinking of any revenue in this financial year. In next financial year, the revenue will start falling in. Revenue potential from this first RFQ is around about close to 45 to 50 crores. And potentially, Maruti is indicating that they are anticipating close to 40% of alloy penetration over next 4 years, from currently 29-30%. And over next 2-3 years, I hope that we will be able to grab a minimum 20-25% market share in Maruti.
Okay. And the second question is on exports. I mean, after a very good initial spurt, which took us to 800 odd crores of revenues in FY22, now we are closer to 630 crores. It's come down, although we jumped quite a bit last year. But the conversation also is more about 10-12% growth only. The export market is quite huge, and I thought there was a lot more optimism in terms of growth with exports, whether it be alloys or steel or whatever. But why is there that certain level of optimism is lower now? 10% growth from an export market perspective is much lower, wouldn't you think?
So I think your point is valid. The larger growth perspective from the aluminum side is fairly very large, and we feel that this percentage is going to be much higher. We are a little bit concerned on the steel wheel side right now, because the degrowth which is happening in terms of the economic cycle on the business is not predictable. What we anticipate right now is that, as the MD of the company said, we have dropped the prices and give the benefits to sustain the margins or the volume to the 4 to 5%. We do not want to just give away everything, and there has to be a sense where the business has to be done, and that is not only price. Right now, engineering is also coming into picture on the steel wheel side, because that's a very nascent kind of a market, and it doesn't grow at 5-10% kind of a pace. Alloy wheel, 100%, there is a very large amount of growth which is anticipated. We will try to update you over next maybe 2 quarters or 1.5 quarters, where long-term agreements will be coming into play into the aluminum alloy wheel side, on aftermarket as well as on OEM. And that is where it is going to be hitting the higher run rate on the export side from a potential market which is very large. So I think we are targeting around about 720 crores in terms of total number that we are anticipating in this financial year, which has an upside from the industry perspective if it grows.
Understood. Just a quick bookkeeping question. Is there any tax benefit we will get from AMW acquisition going ahead?
I think Naveen is working on that because a lot of OEM activities are working on the similar principle. So there is, an angle of tax benefit which is from the accrued losses which comes in. And please give us this quarter's time where we are talking to consultants of taxation, and Naveen can give you a little bit of clarity on that subject.
So, Pulkit, AMW do have some carry forward losses in the form of depreciation. So that is still being evaluated. So once we get a hang on the kind of benefit that we can drive, I guess we'll share it with the market.
Got it. Thank you. All the best.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, hi, good afternoon, sir. Just wanted to check, sir, your thoughts on the employee cost. In last 2 years, we have increased our turnover roughly 25%, but our employee cost is up roughly 60-65%. As companies usually gain scale, we see that percentage to sales coming down. But for us, it's been increasing from 6 to 7 to 8.2% now. So does that concern you by any chance?
Can you please repeat the last part of the question?
Sir, does that concern you, the rising employee cost, or from 6 to 8% now?
So I think with the industry in terms of overall perspective, I think we are around about 7-8% kind of a number. We are growing in a phase where we anticipate the current assets to contribute close to 6,500 crores in terms of revenue. There is certain bit of expense which we are trying to do for future growth. So this is a normal course of action where we do not want to compromise on engineering and the demands which are being generated from export customers. So there is a lot of input which is being put up there. The optimization cycle is already underway and it's a part of the process. The intent is that we want to control it and maintain it and do not want to concentrate only there to improve profitability. I think there are ways to improve profitability in terms of high product margin and sales. That's where the focus is, that we need to hit 4,800 crores. These numbers will look smaller in terms of percentages going forward.
Right. So, sir, now going forward, 10 to 12% kind of nominal growth rate should we assume for the employee cost? Or?
I think we are trying to reduce that 10 to 12% kind of a number. We are trying to optimize that number by the way that. So I feel this 10 to 12% kind of a growth number will definitely contained.
Okay. Secondly, sir, just wanted to check in your adjustment for the exceptional item. So in a normal scenario, your PAT minus your dividend gets added to your net worth. But in this case, seems to be some adjustment wherein your net worth seems to be less than this figure. So any adjustments we have done of this exceptional item adding towards the net worth?
Naveen?
So exceptional item is forming part of P&L, which again is getting added to the net worth. In that exceptional item, see what is happening, there are two parts to it. One is there is a benefit that you are driving from the write back of liabilities. Second, there is a hit that you are taking in the form of write down of current assets which are there in the books. So the net effect is what is visible as exceptional item, which in terms form part of P&L and which is in turn getting added to the overall profit. So the net worth is getting improved by the number which is added there in P&L. As far as consolidated books are concerned.
Right. So sir, your net worth is showing an increase of just 300 odd crores, right? Whereas PAT for the year, including the second item, is roughly 675. So there seems to be some other adjustments also which you have done to your reserves and stuff.
There is another part to it. There is a write back of the equity which was there in the books. So those equity has got extinguished. So those are the directly part of the reserves. What is there in the write back of liability is through P&L. So what you are seeing in the net worth is the net effect of what is extinguished from the reserve in terms of share capital and what is brought in the reserve via P&L movement of these write backs.
Okay, sure, sir. Thank you so much. Wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, we'll take this as the last question. I would now like to hand the conference over to the management for closing comments.
So thanks a lot to everyone for giving us an opportunity to express ourselves for the annual results and share our thoughts about the business. I think there will be questions which are pertaining to AMW and its consolidated impact on the balance sheet as well as P&L. Anybody who has that question can definitely contact SGA or Amit, who have a detailed call on this aspect. And I wish that we can connect more and probably see our business cycle which is starting for the new business verticals as directed by the MD for chemical business. And more plant visits can be arranged to understand the business better one-on-one. And thanks a lot for giving us this opportunity once again.
Thank you. On behalf of SMIPS Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.